The top business stories live from the Sky News City studio. Defence stocks rally, but the shekel falls as markets respond to the crisis in Israel. Metro Bank secures a new financing deal, but at the expense of some bondholders and shareholders. As the metals industry gathers in London, I'll be joined by the chief executive of the metals and mining giant Rio Tinto. Plus, Labour vows to revive the sluggish economy with plans and reforms to speed up the building of crucial infrastructure. Good morning. This is Business Live with me, Ian King. Shares of defence companies have risen while the oil price has seen a modest rally this morning as markets responded to the crisis in Israel. But shares of airlines and hotel operators have fallen, as has the Israeli shekel, as analysts try to work out the economic and geopolitical implications. By joining me now is William Jackson. He's Chief Emerging Markets Economist at Capital Economics. William, welcome to you. You don't think this will actually disrupt Israel's economy very much?
It's very hard to say. We're at the very early stage of the conflict. We're only 48 hours in, and there are numerous ways it could develop, and these could be very unpredictable. But what we can look at previous conflicts between Israel and Gaza, and the lessons from those are that there will be some near-term economic disruption, particularly to sectors like tourism, to retail spending. Israel's economy will be affected, but typically the economy's recovered once the conflict has come to an end. But of course, the economic impact is really going to depend on the severity and the length of this conflict, which at the moment remains very much uncertain.
Now, the oil price moved slightly higher, but there hasn't been any really sort of spectacular move. Presumably that could change if this mutates into sort of wider conflict with Iran.
Absolutely. The move in the oil market, like you said, has been on the perhaps smaller than you might have expected, given the severity of the developments in the last few days. But there do seem to be, there are ways that this could get much worse. Like you say, Iran appears to be implicated. There are lots of reports that Iran helped plot the attacks. Iran certainly expressed sympathy for the militant attacks. And were tensions between the West and Israel on the one hand and Iran on the other to ratchet up, we could really see the oil market being a source of vulnerability. Iran's been raising oil production quite significantly over the course of this year, with the West seemingly turning a blind eye. Now, they could very easily start to clamp down on that and hit this financial lifeline for Iran.
Now, a lot of people think Hamas attacked when it did because Israel and Saudi Arabia are on the point of normalising relationships. What's going to happen to those talks as a result of these attacks?
This really is going to make these talks much harder to get to a clear conclusion. It looked like we'd been nearing an Israel-Saudi peace deal, but one of the sticking points seemed to be that Israel would need to make some concessions to the Palestinians. It's really hard to see that happening now.
I mean, that was the interesting point. I mean, it felt that by entering these talks with Israel, the Saudis were almost washing their hands of the Palestinians. I mean, that seems to be happening quite a bit across the Arab world just now.
It's a very nuanced situation, and I think I perhaps might not characterise it as washing their hands of the Palestinian situation. The Gulf states, to varying degrees, continue to have sympathy for the Palestinian cause, but it appeared to be that they were still moving in the direction of trying to extract some concessions from Israel towards Palestinians, but looking for a broader peace agreement and the normalization of business and economic and diplomatic relations with Israel.
William, got to leave it there. Really appreciate you joining me today. Thank you.
Thank you.
Well, the oil price rose by just over 5% earlier today on the crisis in Israel, but it's given back much of those gains as the morning has gone on. A barrel of Brent crude will currently set you back $87.59 a barrel. That's up a little over 3.5%. Takes us back to last Wednesday afternoon, roughly. On the foreign exchange markets, well, the Israeli shekel fell at one point to hit its lowest level against the US dollar since 2016 before recovering slightly. Elsewhere, there's been a general move into the dollar, as you might expect on these sort of occasions. Sterling off 0.5% against the greenback, up very slightly, about an eighth of 1% or so against the euro. The single currency likewise off by just over 0.5% against the dollar. On the equity markets, well, there was mixed trade overnight in the Asia-Pacific region. Shanghai opened lower following the end of its Golden Week holiday. To the upside, Sydney rose for a third day running, driven by energy and mining stocks. Well, in Europe, stocks have been in pretty downward territory right now. Not massive sell-off, in all honesty. Defence stocks are much higher, notably Saab, the jet fighter group, that's up 9% in Stockholm, and Rheinmetall, which makes tanks, they're ahead by some 5.5% in Frankfurt. Here in London, the FTSE 100 similarly is in positive territory right now, up 0.25%. BAE Systems is the leading blue chip gainer, followed by BP and Shell, and the Mexican silver miner Fresnillo. To the downside, International Airlines Group, the owner, of course, of British Airways and Aer Lingus, that's off by some 3.75%. Likewise, outside the FTSE 100, travel and tourism stocks are all trading to the downside, led by Wizz Air, EasyJet and TUI, while the oil and gas producer Energen, which has assets in Israel, that's currently off by some 17%. Other stocks with Israeli exposure are also trading to the downside, including BATM Advanced Communications, a former favourite, that one among small investors of many years. That's down 8% right now. Well, joining me now is Emily Montgomery. She's Associate Director for Personal Investing at Fidelity International. Emily, good morning to you. How do people play this situation?
Yeah, it's a very tricky one, isn't it? Because it's really changed, the sort of economic and political structure here. And I think what we've got to look out for is what happens with the oil price and what happens with the oil-producing nations. Israel obviously isn't an oil producer, but obviously Iran is. And we've got the whole, sort of all the competitors and neighbours, really, of Israel over there. If this sort of tension's brewing over there and there's problems with the US, maybe it starts to clamp down on its sanctions, which has been very, sort of relaxed about for the last 6 months or so. If that starts to happen and Iran stops producing as much oil as it has been doing, or releasing as much as it has been doing, that could see the price go up quite heavily. We could be looking at sort of, Brent crude going up to $100 a barrel again. Yeah,
I mean, that would certainly have been implied anyway by the supply cuts that the likes of the Saudis are pushing through. I mean, what about the relationship between the Saudis and Iran? Saudi, as we've just heard, starting to normalise relations with Israel, the last thing that its old enemy Iran wants to see.
Absolutely. And of course, you've got the situation there, haven't you, where the US has been doing all this work. That's potentially going to look like a footnote now, isn't it, compared to what's actually happening with Israel and Hamas attacking. So what's going to happen there is for everybody to watch and see. But yeah, this could really undo all the good work and really make sort of tensions rise and affect the oil price considerably.
Yeah, now what about some of these travel and tourism stocks? I mean, EasyJet is in your sights anyway because they've got results coming up.
They have got results and, by all intents and purposes, it's been a great summer, if not a sort of a record, sales and profits on the horizon there. But of course, we've already seen stuff like the air traffic control issues. Now, EasyJet's got this to deal with. They've actually stopped all flights to Israel right now. So, it's not been an easy ride. There's been a lot of turbulence, if I can use that, for the airlines, and it's definitely not over yet. So, yeah, all eyes will be on EasyJet to see how they did. But obviously now the focus is going to be on looking forwards and saying, what's going to happen next? What else could be in its path that could affect its profitability?
Yeah, I mean, these travel and tourism companies really do have some real headwinds at times like this, don't they? I mean, I was quite surprised to see Intercontinental Hotels fall this morning. I mean, it's been trading at close to its all-time high, but Israel and the Middle East is only a small part of its global footprint.
It certainly is, but I think it's just another sort of spanner in the works, isn't it? And it's this global uncertainty as to what's going to happen next and who's going to be affected. And I think as a result, investors are very cautious, they're very wary about where this is all going to lead, and also the sectors that are going to be affected. Like you say, IHG's only got a small proportion in the Middle East, but it's a sort of knock-on effect, isn't it? If it's going to stop global travel, if this could spread, if it could get worse, and obviously if people aren't travelling because oil prices go up, and then knock-on effect is that it gets more expensive for travellers as well to travel. That could be a problem there, I suppose, for hotel companies worldwide.
All right, Emily, good to see you this morning. Thank you. Our shares of Metro Bank have surged by 23% this morning after the lender secured a financing deal in which it raised £325 million worth of new capital, £150 million from a sale of new shares and £175 million in debt. It's also refinanced some £600 million worth of existing debt. Well, with me now is our city editor, Mark Kleinman, who's been on top of this story throughout. Mark, I mean, is this job done then as far as Metro Bank's concerned?
Well, it's certainly on the way to being job done. You can see from that share price reaction this morning that something of a relief rally in Metro Bank shares after the turmoil of last week. There are still some formalities to go through in terms of votes by debt and equity holders to approve this deal. But crucially, it does have the backing of the Bank of England, which issued a supportive statement late last night. And I think one of the things to bear in mind here Ian, is that this has to be regarded as the least worst outcome for Metrobank debt and equity investors. After all, the alternative that Metrobank's board was staring down the barrel of over the last few days was either being sold to a bigger rival. We know that there were talks, for example, taking place yesterday with Santander UK, which made a name for itself buying up distressed banks during the 2008 financial crisis, or even worse, some form of resolution which might have wiped out shareholders altogether. So at least there is now some prospect of a recovery in the longer term in Metrobank's valuation, although clearly the last few days have been very torrid ones indeed for any investors exposed to Metrobank's shares and its debt.
Thanks, Mark. Some other business news stories for you now. And shares of Croda International fell by nearly 7% this morning after the FTSE 100 Specialty Chemicals Group said profits for the year would be less than previously expected. Croda, whose products are used by many fragrance and cosmetic suppliers around the world, including Estee Lauder, highlighted a weakening in demand, especially in North America, along with destocking by customers. Profits for the year are now expected to be between £300 and £320 million, down from the previous forecast of £370 to £400 million. The drugs giant GSK has signed a deal with China's biggest vaccines company that will see Shingrix, its shingles vaccine, distributed in the country. Zhifei will buy £2.5 billion worth of Shingrix over a 3-year period beginning in January 2024 for distribution through more than 30,000 vaccination points across the country. Well, under the agreement, Zhifei has given GSK first refusal to be its exclusive partner for any co-development and commercialisation of an RSV vaccine for older adults in China. GSK shares currently ahead by just under 1%. And the German footwear group Birkenstock is expected to be valued at $10 billion when its shares begin trading on the New York Stock Exchange on Wednesday. Shares are expected to be issued at the top end of the range put out by the company amid strong demand from would-be investors. Birkenstock's existing majority shareholder, the private equity firm El Caterton, will retain an 82.8% stake in the business following the IPO. Now, today sees the start of LME Week, the annual gathering of the global metals community in London to discuss current trends in metals markets and what to expect for the year ahead. One of the key themes is the transition to net zero, and central to that will be sourcing the elements such as copper and lithium required for the electric vehicles, wind turbines and batteries needed for the transition. Well, joining me now is the Industry Minister Nusrat Ghani and Jakob Stausholm, Chief Executive of Rio Tinto, the world's second largest mining company. Welcome to you both. Jakob, let me start with you. I mean, people talk about cobalt and lithium, but it's actually aluminium and copper that are really going to drive this transition.
Well, thank you. You're absolutely right. Battery materials are very important, but the size and the scale of copper and aluminium is a completely different size. And if you look at building a whole new energy system to the world, today, 82% of the world's energy needs comes from fossil fuels. Building a new energy system requires a staggering amount of critical minerals. The two biggest, as you already said, is aluminium and copper. But battery materials will grow substantially over the next decade as well. So it's a huge challenge. It's a huge opportunity for us as a company. But the other flip of the coin is, of course, we also have to decarbonize as a company so that we can provide those with a much lower carbon footprint.
Well, we'll get on to that in a moment. But Nusrat, I mean, you set up an independent critical minerals task force earlier this year to guarantee the supply of critical minerals. What progress has been made to date?
So we refreshed our critical mineral strategy to take into account not only the rush globally in accessing more critical minerals. We're going to need 4 times as much as we do now, also dealing with some of the geopolitical issues as well. But also we put together a task and finish group to understand exactly what industry needs so we can meet their demand. So within that, we are ensuring that we're collaborating with the countries that are close or are the producer countries. So we are working in partnership with countries like Canada, Australia, Zambia, Saudi Arabia, and obviously talking to Australia and Japan too. We're also trying to accelerate production in the UK. We've got 3 fantastic projects across the UK. Cornish Lithium comes to mind. When that's up and running, it'll provide us with 10% of lithium that we need for our electric vehicle auto manufacturing supply chain. There is a big rush, but you can't achieve net zero without mining. And as Jakob has said, you can have green mining as well. We've got a third of the mining community here in London for LME Week, and we will do what we do best in the UK, which is ensuring that the highest ESG standards are set and maintained, and that's exactly what investors are looking for when they take part in Critical Minerals Week during Metals Week.
Well, Jakob, as you said, you're trying to do two things at once. You're not only trying to shore up supplies of vital minerals, but you're also trying to decarbonise. I mean, you've pledged to reduce your Scope 1 and 2 emissions by 50% by 2030. That presumably comes at a huge cost to the business.
It does, and we have said we're going to invest $7.5 billion to get there. And the reality is 2030 for a company like us is really tomorrow. We have to take decisions right now in order to have it up and running and have the smaller footprint in 2030. It's a tall order, but we believe it's possible. We can already see some technological breakthroughs. The main part of our emissions stems from our processing. And it is about finding new ways of doing manufacturing, and we're making really good progress.
When do Scope 3 emissions fall under your targets?
Well, we are certainly very associated with it. We are working with our customers to solve it. But we just have to recognize that we can't control it 100% ourselves. It depends on societies. If societies are not building enough renewable energy, if our customers are not prepared to change their manufacturing processes, then it's very difficult for us to impose anything. But we have an important role to play, and a lot of it goes through research and development. And for example, for us, who are the world's largest producer of iron ore, we work with the steel producers on finding different ways to produce steels of the future.
That's right. What keeps you awake at night in terms of mineral supply? Do you worry, for example, about China cornering the market in the resourcing of some vital minerals?
China has cornered the market, and the reality is they produce 80% of all batteries that are needed, and they're in the rare earth mineral space. And we haven't spent enough time working at how we make our supply chains more resilient, which means that we have to diversify. What enables me to sleep is doing some of the work I'll be doing tomorrow, which is co-chairing the Mineral Security Partnership with our American colleagues. That's 14 countries working on over a dozen projects to ensure that we are not only accessing, but we are providing the best value added to the producer countries to making sure our supply chains can be more resilient, well, much more than they are at the moment. We mustn't forget that we can't achieve net zero without mining, and we can definitely do green mining as well. And then what else is happening in the UK? We've got projects in the UK which will provide us with even more assurance and support for our advanced manufacturing sector. You probably covered this because, a business programme, but a few weeks ago, we leapfrogged the French to become the 8th largest manufacturer in the world. For me now, to get us to 7 and 6, I need to make sure my supply chains are far more accessible than they are at the moment.
Jakob, how are you reshaping the portfolio to recognise these new realities? I mean, you've talked, for example, about going into lithium. Is that front of mind for you right now?
It's certainly one of the opportunities. There are many opportunities around the world. I would like to just say one of the things that's really is important, and I really appreciate being here with Minister Ghani, is to see cooperation between countries. Because the reality is, of course, that metals has to be extracted in one area and consumed in another area. So it's per definition a global industry. Right now, for example, we are developing a lithium mine in Argentina, and we are trying to sell our lithium into primarily the European and the American markets, etc. So these things require quite some planning. There are also some risks in going into developing countries, and getting help from consuming countries is most helpful. So yes, we are expanding. We are building new mines. We are trying to build a mine in Serbia, for example, where there is a tremendous resources of lithium. But it does require quite a lot of support from neighbouring European countries.
But you've shown you can do it. You can work with governments in slightly unusual places. For example, Oyu Tolgoi in Mongolia.
Absolutely. We have invested $15 billion in Mongolia. It's a vast country, but there's only 3 million people living there. And that's actually something that makes a huge difference to that country. And will turn out to be the 4th largest copper mine in the world. We can only do that by getting good support, not just working with the Mongolian government, but also working with other governments.
Nusrat Ghani, Jakob Stausholm, good to see you both. Thank you. Still to come here on Business Live. We'll be live in Liverpool as Labour vows to revive what it calls the sluggish economy. Don't go away.
I'm Dan Whitehead and I'm Sky News' West of England correspondent. From fishing communities to bustling cities, we spend every day reporting from across the region.
There's always more to the news than a headline. We want to discover, to delve a little deeper, to find out what's really going on. Explanation, analysis, the people at the heart of every story. I'm Neil Patterson, and this is the Sky News Daily Podcast. Alex Crawford joining us now from Ukraine.
Their personal possessions are all scattered around the place.
Our economics and data editor, Ed Conway, try and make sense of the big numbers for us.
Things can change incredibly quickly, and that's what they have done.
So, by the end, we'll hopefully all understand what's going on in the world just that little better. Available wherever you get your podcasts.
Fly Emirates, fly better. Fly Emirates, fly better. Thank you.
Welcome back. It's the second day of the Labour Party conference in Liverpool with the focus on business and the economy today. In the next few minutes, the Shadow Chancellor Rachel Reeves will be making her big speech to conference, promising planning reforms to speed up the building of crucial infrastructure. Well, our economics editor Ed Conway is in Liverpool. Ed, I mean, she makes it sound quite simple, speeding up planning reform, but presumably if it was that simple, the Conservatives would have done it by now.
Yeah, to be honest, this is something that pretty much every major political party has tried to do and promised going back as long as anyone can really remember. That being said, what's interesting about this is partly the policy, but obviously here we are, it's party conference. It's about the messaging, and the messaging that the Labour Party really want to give is that this is a party which they say is the government in waiting. They want to be trusted with the economy. They've changed quite a lot of the messaging, obviously, since the Corbyn era. And also now they want to give a sense of having the backing of business. And again, what's striking here is just how many people have come. In comparison with the Conservative conference just a week ago, it's worth actually us keeping an eye on the stage, because we are going to get Rachel Reeves coming on that stage here in Liverpool in a moment. But what's also going to be interesting, maybe, you know, in a sense even more interesting, is who is introducing her, because there's a couple of very high-profile people, I hear, who will be introducing her, who are going to be bringing a message which I think we're going to look out for as well. And I think the other kind of question is, you know, How is this differing from the conference that we saw last week? Last week, the Conservatives very much focused on retrenching, on reducing some of their spending commitments. HS2, obviously, the famous cancellation there. You had net zero, kind of pulling back on some of the ambitions on net zero. Here, the emphasis from the Labour Party is about building. It's about economic growth. It's about those kinds of things, which marks a very different kind of narrative to what we were hearing about for Conservative Party just last week. In terms of policy, as you say, there's planning, there's talk about planning, and there's talk about trying to make it easier, essentially, for people to build big infrastructure projects, particularly when it comes to things like net zero, so wind turbines, solar panels, battery factories, and so on. But there's also going to be various different measures. She wants, for instance, to introduce measures that are going to make it easier to clamp down on overspending in the future, measures that are going to essentially make it more difficult to try and have those overruns that we saw with HS2. So there will be policy, but as I say, the interesting thing to watch is going to be the positioning, how she is trying to message people out there in the public that Labour is the party to be trusted. That's going to be the thing to look out for, as well as I say, who's going to introduce her as well. That's going to be pretty significant too.
OK, thanks, Ed. That's it from me for now. I'll be back at 4:30 with our afternoon edition. In the meantime, do stay tuned. Up next is that speech from Rachel Reeves at the Labour conference. See you later. Cheerio.